What if I told you that the people who make the most money in the market don't trade to win? In fact, the best traders in the world think like losers. They don't fantasize about Ferraris, they don't chase high win rates, and they definitely don't count how many trades they got right this week. They do something else, something the average trader can't stomach. They rehearse losing, they plan for it, they welcome it. Not because they like pain, but because they've learned the most important lesson the market has to teach. That pain is the only price for clarity. That loss is the only path to real control. You see, most people come into trading hoping to escape discomfort, to beat the market, to beat the fear. But the ones who stay, the ones who thrive, they let the fear do its job. They don't suppress it. They sit with it, study it, and then they learn how to move anyway. You've been told that trading is a game of signals and timing and setups, but it's not. Trading is a mirror. It reflects everything inside you: your fear of being wrong, your need for validation, your impatience, your greed, your shame. Every time you place a trade, the market asks you, are you in control of yourself, or are you still chasing the ghost of your last loss? And if you're like most people, you answer without realizing it. You enter too early, you exit too late, you double down on revenge. Not because the chart told you to, but because your nervous system did. The truth is simple. Most traders don't fail because of poor strategy. They fail because they never learned how to suffer well. But the best ones, the ones who win long-term, they've made peace with losing. They've built muscle where others feel fear. And they've mastered the art of doing the hard thing, calmly. This isn't about motivation. This is about transformation. And if you're ready to see what losing really means, and why it might be your only real advantage, then what comes next will flip everything you thought you knew. Because in this world, the best loser always wins. Insight 1. The lie of winning. There's a lie most traders are sold before they ever place their first trade. It sounds like this: if you study hard enough, if you follow the right mentors, if you find that perfect strategy, you'll win. It's seductive. It feels empowering. But it's a setup, because buried beneath that promise is an unspoken message that losing is failure, that every red candle, every drawdown, every stop out is a sign that you did something wrong. And that lie, more than any loss, is what destroys most traders. Tom Hugard knows this better than anyone. He was once the embodiment of that lie: intelligent, prepared, obsessed, and still, he lost. Over and over again. In his book, he shares the exact moment it broke him: a $127,000 loss in a single day. Not from being reckless, from being right about the direction, but wrong about the timing. The market gapped against him overnight. No chance to exit, no control, just devastation. But here's where most traders quit listening. Tom didn't blame the market. He studied what happened inside him. What he discovered was this: the need to win is the most dangerous addiction in trading. It clouds your judgment. It hijacks your discipline. It makes you chase setups that aren't there just so you can feel something. And when you don't win, it doesn't just hurt. It questions your worth. So, you trade again and again, until the market teaches you the one lesson it gives everyone eventually. It owes you nothing. In fact, the more you expect from it, the more it takes. What Tom learned, and what most never do, is that the traders who last are not the ones who seek to win more. They are the ones who've reframed what losing means. They've shifted from "how do I avoid losing" to "how do I become stronger through it." He tells a story about watching a professional poker player lose hand after hand without flinching. When Tom asked how he stayed so calm, the player said, "I've already accepted I'll lose 45% of my hands. My edge isn't in winning more, it's in losing better than everyone else at this table." Insight 2. Why your brain is designed to lose. You don't trade the market, you trade your brain. And that brain of yours, it's about 200,000 years out of date, built for survival, not strategy. Designed to keep you alive in the wild, not to help you hold through a pullback on a 5-minute chart. Here's what they don't tell you. Every time you feel fear during a trade, it's not a rational response to your system being invalidated. It's your amygdala, the brain's panic button, screaming that you're about to die. Because in prehistoric times, uncertainty meant danger, and danger meant death. Tom shares a specific experiment he did on himself. He measured his heart rate during trading, normal resting, 65 BPM. During a winning trade, 72 BPM. During a losing trade, 138 BPM. His body literally thought he was being chased by a predator. Try being rational with a heart rate that's doubled. That spike in cortisol, that rapid heartbeat, that tunnel vision, that's your body doing exactly what it's supposed to do, just in the wrong context. Now imagine trying to be a professional in that state. Imagine trying to calmly execute your strategy while your body is begging you to run. That's the war every trader fights. And most lose, not because of lack of knowledge, but because they never realize what they're up against. But wait, it gets darker. Tom discovered that traders who grew up in unstable environments have it even worse. Their amygdalas are pre-programmed to overreact. One study he cites shows that children of divorce are 73% more likely to exit trades early. Why? Because uncertainty triggers deeper trauma responses. Now, 3. The first trauma is the market itself. The first time you lose big in the market, something in you changes forever. It's not just the money. It's the moment your illusion of control shatters. You thought you were the one making decisions, but now your body is trembling. Your mind is racing. Your identity, this image you had of being smart, capable, calculated, it just got torn apart by something you thought you understood. Tom's first trauma? October 2008. He was long the FTSE with $50 per point. The market crashed 8% in minutes. He lost $23,000 before he could even react. But here's the detail that haunts him. He actually predicted the crash might happen. He'd written in his journal the night before, market feels toppy, might gap down. But he went long anyway. Why? Because his last 3 trades were winners and he felt invincible. Here's where it gets painfully funny. Tom admits he spent the next 2 weeks checking his account every 5 minutes, hoping the money would magically reappear. Like the market made a mistake and would apologize with a deposit. Classic bargaining stage of grief, except with a trading account. That trauma created what Tom calls the flinch. From that day, every time the market moved fast, his hand would literally shake on the mouse. Not metaphorically, actually shake. He had to start using keyboard shortcuts because he couldn't click accurately when stressed. Insight 4. How fear distorts reality. Fear doesn't whisper. It warps. It bends the very structure of your perception, distorting the truth of what's in front of you. In the market, fear doesn't just make you nervous. It lies to you. Tom shares a specific example that's both tragic and hilarious. March 2011. He sees a perfect bull flag on EURUSD. Textbook setup. His system screaming buy, but fear whispered, it's a trap. So he waited and waited. The pair moved 200 pips without him. Later that day, he checked his journal from 2010. He'd taken the exact same setup 14 times. Won 11 of them, but fear made him forget his own data. This next part saved his career. Tom started recording himself trading, not the screen, his face. What he saw shocked him. When he was in a losing trade, his pupils dilated. His breathing went shallow. He literally looked like a different person. Fear had hijacked not just his mind, but his entire physiology. He discovered fear has a specific pattern. First 30 seconds, denial, it'll come back. Next minute, anger, market's wrong. Next minute, bargaining, just get me to break even. Final stage, panic exit at the worst possible price. Insight 5. The emotional circuit breaker. Every trader has a moment where the pressure builds too high. A setup unfolds, but your breath shortens. Your hands hover over the mouse, hesitant. You hear yourself whisper, "Don't mess this up." And in that moment, your system doesn't matter. Your edge disappears. All that's left is raw emotion, and it's in control now, unless you have a circuit breaker. Tom's circuit breaker is almost stupidly simple. When he feels the heat rising, he stands up and says out loud, "I am Tom Hugard, and I'm about to do something stupid." Just saying it breaks the spell. It's like his rational brain hears the warning and wakes up. Here's the funny part. His neighbors once called the police because they heard him yelling, "Don't do it, Tom," at 3 a.m. during Asian session. He had to explain he was talking to himself about a Forex trade, not planning something dark. The officer said, "Maybe try journaling instead." But Tom took it further. He installed a 60-second delay on his trading platform. Any trade he wants to place has to wait a full minute. In that minute, he asks 3 questions. Is this my setup or my emotion? 2. What would I tell a student to do here? 3. Can I afford to be wrong here, financially and emotionally? That minute has saved him over $500,000 in revenge trades. Insight. 6. The revenge trading spiral. It always starts the same way. A good setup, a clear plan. Then something unexpected. A loss, a bigger one than you expected. A mistake that shouldn't have happened. And then, snap, something inside you breaks. Logic fades. Emotion takes over. And suddenly, you're no longer trading the chart. You're trading your anger. Tom's most expensive lesson, December 2012. Lost $8,000 on a perfect setup that got stopped out by 1 pip before running 300 pips in his direction. Instead of walking away, he went full tilt, tripled his position size, abandoned his system, started trading every tick like it owed him money. 6 hours later, $62,000 gone, his entire year's profit. Why? Because that 1 pip felt like a personal insult. The aftermath was brutal, but also hilarious in hindsight. Tom tried to hide the loss from his wife by acting extra cheerful at dinner. She knew immediately. "You revenge traded again, didn't you?" she said. "Your fake smile only shows up after big losses." Even his face had tells. But here's what saved him. Tom created what he calls the wall of shame, screenshots of every revenge trade printed and taped above his monitors. Not to punish himself, but to remember the feeling, the stupidity, the cost of emotional hijacking. Some traders keep vision boards. Tom keeps failure boards. Insight asks why amateurs crave validation. Most traders won't admit this, but deep down, they're not really trading to make money. They're trading to feel worthy. Every green candle is a small hit of self-approval. Every winning day is a reason to believe they're finally good enough. And every loss? A confirmation of every hidden fear. Tom tells a cringeworthy story about his Facebook phase, 2013-2014. He'd post his winning trades with captions like, "Another one in the bag," and "Market gave me a gift today." The likes felt better than the profits. Until the day he posted 17 wins in a row, got 200 plus likes, then lost everything in a single revenge trade the next morning. He never posted about that one. Here's where most traders quit listening. Tom realized he was scheduling his trades around social media. He'd take setups during London Open because more people would see his posts. He once held a losing position an extra hour because he'd already bragged about it online and couldn't face posting the loss. The turning point? His mentor asked him one question. Would you still trade if no one could ever know your results? Tom couldn't answer. That silence told him everything. He was performing, not trading. Using the market as a stage for his insecurity theater. Insight 8. Becoming a professional loser. There's a phrase Tom Hugard repeats like a mantra. The best loser wins. At first, it sounds like a contradiction. How can someone who loses be the winner? But the deeper you go into trading, the more it makes sense. Because success in this game doesn't come from avoiding loss, it comes from metabolizing it. Tom shares an exercise that sounds insane but changed everything. He calls it loss therapy. Every Sunday, he'd fund a small account with $500 and deliberately lose it all by Friday. Not randomly, methodically. He'd take valid setups but use massive position sizes guaranteed to blow up. Why? To feel the loss without the surprise. To make friends with the feeling. The funny part? His broker called to check if his account had been hacked. No one loses this consistently without help, they said. Tom had to explain he was failing on purpose. They still didn't believe him. But here's what happened. After 6 weeks of deliberate losses, real losses stopped hurting. His nervous system had been exposed to the feeling so many times, it stopped treating it as a threat. Like a boxer who's been hit so much, the punches stopped stunning him. Tom even quantified it. Before loss therapy. Time to recover from a loss. 3 to 4 days. Emotional pain level. 8-10. Chance of revenge trading, 67%. After 2 months, recovery time, 30 minutes. Pain level, 3-10, revenge trading, down to 12%. But wait, it gets better. Tom discovered that professional athletes do the same thing. NBA players practice missing free throws. Surgeons simulate failed operations. Navy SEALs train for mission failure. Only traders expect to win without rehearsing loss. Insight 9. Simulated pain builds real power. What if the best traders in the world don't practice by risking real money? What if their edge was built not on live markets, but inside quiet rooms with no pressure? Only preparation. Tom's war room setup is legendary among his students. Every morning at 5 a.m. before London opens, he runs historical simulations. not just replaying charts, living them. He covers his screen except for a small window, showing one candle at a time. Then he trades it like it's real, complete with fake money management and emotional tracking. Here's the obsessive part. He once simulated the entire 2008 crash, day by day, treating it as live. It took 3 months. He'd wake up, check his account, feel the fear of margin calls that weren't real. His wife thought he'd lost it. But when the next real crash came, he was the calmest person in the room. The data is staggering. Tom tracked 10,000 simulated trades. Win rate in simulation, 54%. Win rate when same setups appeared live, 53%. Emotional stability score in sim, 610. Emotional stability live, 810. The practice made him stronger in real markets than in fake ones. This next detail is crucial. Tom discovered that typing out his emotions during simulations was more important than the trades themselves. He'd write things like, getting angry at this EOR USD pin bar, or want to revenge trade so bad right now. Those notes became a map of his triggers. When the same emotions appeared in live trading, he recognized them instantly. Insight. 10. Identity detox. You are not your trade. Every time you win, a part of you whispers, see, you're good at this. And every time you lose, that same part hisses, maybe you're not cut out for this. That voice, the one tying your performance to your worth, is the voice that ruins more traders than any market crash ever could. Tom's identity crisis peaked in 2015. After a great quarter, he bought a car with the license plate Trader 1. He wore trading-branded clothes. His Twitter bio said, I eat pips for breakfast. Then came the drawdown. 6 months of losses. Suddenly, the car felt like a lie. The clothes felt like a costume. He was a trader with no trades to brag about. The breaking point was almost comic. He went to a trading conference wearing his Forex t-shirt after losing 30K that month. Someone asked, why do you love something that clearly hates you? The question hit like a slap. He left early, went home, and threw out everything with trading logos. But the real detox went deeper. Tom started referring to himself in third person during trades. Instead of I'm losing, he'd say, the system is experiencing a drawdown. Instead of I nailed that trade, it became the setup performed as expected. Weird? Yes. Effective? Absolutely. He even changed his passwords. From winning 2015 to process not profit. From Trading King to Just Data 2016. Every login became a reminder. You are not your results. Here's where it gets profound. Tom noticed his best trading days were when he forgot he was trading. When he was so detached, he'd check his P&L at day's end and be surprised, good or bad. That's when he knew the detox worked. Insight. 11. The market is your therapist. The market doesn't speak in words, it speaks in wounds. Every trade you take, every reaction you have, every impulse you chase or resist, it's all a mirror, a feedback loop. And if you listen closely, the market isn't just showing you the trend, it's showing you your trauma. Tom's journal from 2016 reads like therapy notes. One entry, took profits too early on GBP USD. Same spot as always. Same fear. Dad left when I was 8. Can't handle good things lasting, even in trading. The connection floored him. His abandonment issues were sabotaging his runners. This is where traders stop reading, but Tom went deeper. He mapped his trading mistakes to childhood patterns. Cutting winners early, fear of abandonment. Holding losers too long, trying to fix the unfixable. Overtrading, seeking attention, validation. Revenge trading, Orstelt's unprocessed anger at authority. He even hired an actual therapist who specialized in traders. First session, she asked, tell me about your relationship with disappointment. Tom laughed, thinking she meant trading. She meant his father. By session 3, he was crying about trades that reminded him of childhood helplessness. The breakthrough was worth the tears. Once Tom saw these patterns, he could interrupt them. When he felt the urge to cut a winner, he'd ask, am I protecting profits or protecting myself from disappointment? The question alone changed his hold times. Average winner went from 1, 2R to 2, 8R in 6 months. Insight 12. The journal is your emotional autopsy. The market leaves clues, but only for those who record them. And the most successful traders? They're not just students of price action. They're forensic analysts of their own behavior. Tom's journaling system is borderline obsessive. 3 notebooks. 1. Trade log, entries, exits, basic data. 2. Emotional autopsy, what he felt and when. 3. Future self letters, advice to tomorrow's Tom. The emotional autopsy is where magic happens. Real entry from a losing day. Felt invincible after morning win. Chest puffed out. Typed aggressively. That should have been my warning. Invincibility. All incoming humility. Took next trade with double size. Market spanked me back to reality. Lesson, confidence is quiet. Ego is loud. But here's the part most skip. Tom reviews journals from exactly 1 year ago, every single day. Why? Because markets are seasonal, but so are emotions. His January journals always show overtrading, New Year motivation. His August journals show undertrading, vacation mindset. His December journals show revenge trading, trying to save the year. The most painful discovery. Tom found the same sentence written 47 times across 2 years. I knew I shouldn't take this trade, but... Those 5 words, but I did it anyway, cost him over $200. Now, whenever he writes I knew I shouldn't, he stops. No buts, no trades, no exceptions. His journal even predicted his divorce. Months of entries saying, too stressed to focus, and trading to escape home drama. The market was reflecting his life chaos. When he finally addressed the relationship, his trading improved immediately. Insight 13. The 3 phases of trader maturity. Every trader dreams of mastery, but few understand the path it takes to get there. Because trading doesn't just test your strategy, it tests your evolution. And according to Tom Hugard, the journey of a trader unfolds in 3 distinct phases. Phase 1. The excitement addiction. Tom calls this trading puberty. Everything is intense. You check charts like texts from a crush. You dream about setups. You tell everyone you're a trader, especially Uber drivers. Tom's Phase 1 lasted 3 years and cost him $73,000 in tuition to the market. Specific symptoms he documented: checking P&L every 12 minutes, having 47 browser tabs open with trading content, joining 14 different Discord groups, buying 23 trading courses, completing 2, screenshot folder with 3,047 perfect setups he missed. Phase 2. The dark night of the trading soul. This is where hope goes to die. Tom's Phase 2 started after losing $40,000 in 1 week, trying to make it all back. He described sitting in his car outside his house for 2 hours, unable to face his family. Not because of the money, because he finally saw who he really was, an emotional gambler with good charts. The collapse symptoms: couldn't look at charts without feeling sick, deleted all trading apps, told his wife he was done, she'd heard it before, applied for real jobs at 3 a.m., Googled his trading addiction, real, 184 times. But here's what saved him. In the darkness, something shifted. He stopped trying to win and started trying to understand. Who was this person destroying accounts? Why did he need to be right so badly? The market had broken him open, and in that opening, wisdom entered. Phase 3. The boring beautiful. Tom's Phase 3 started with the most underwhelming trade of his life. EUR/USD, tiny position. Hit his target. Felt nothing. No excitement, no relief. Just data. His wife asked how his day went. Fine, he said, and meant it. That's when he knew he'd arrived. Phase 3 markers. Forgets to check P&L some days. More excited about process improvements than profits. Can explain his edge in 1 sentence. Trades the same setups for years without boredom. Loses without story. Wins without glory. Insight 14. Trading is spiritual practice. For most, trading is a means to an end. Freedom, wealth, recognition. But for the rare few who endure the fire, who stay after the excitement fades and the ego crumbles, trading becomes something else entirely. A path, a practice, a spiritual mirror that reveals who you truly are. Tom's morning ritual sounds like it belongs in a monastery, not a trading room. 4:45 a.m. Wake without alarm, body knows. 5 a.m. Meditation facing his screens, monitors off. 5:20 a.m. Writes 3 things he's grateful for. 5:30 a.m. Reviews. Yesterday's trades with zero judgment. 5:45 a.m. Sets intention. I trade to stay awake, not to take. The weird part that works. Tom bows to his trading station before sitting. Like a martial artist entering a dojo, he says it reminds him that the market is his teacher, not his enemy. Respect the teacher, learn the lesson. He tells of a day when he made $50,000 and felt empty. Then a day he lost $5,000 and felt peaceful. That's when he realized He wasn't trading for money anymore. He was trading for presence, for the challenge of staying conscious when every cell wants to react. Here's what most miss. Tom tracks his meditation minutes as carefully as his trades. The correlation is undeniable. 10 minutes meditation. My Mercer's 43% win rate. 10-20 minutes. Yours 52% win rate. 20 plus minutes. 58% win rate. But the win rate isn't the point. It's the quality of presence. On high meditation days, losses don't sting. Wins don't intoxicate. He's just there, watching, participating without attachment. Insight 15. Losing is inevitable. Suffering is optional. Every trader loses. That's a fact. Loss is not a flaw in the system. It is the system. It's built into the game like gravity. What separates the amateur from the master isn't who avoids losses. It's who stops suffering because of them. Tom's record losing streak, 23 trades in a row, February 2017. System was fine. He'd back-tested it through similar periods. But living it was different. By trade 15, he was questioning everything. By trade 20, he was numb. By trade 23, something beautiful happened. Complete surrender. He describes the moment perfectly. I took trade 24 with the same care as trade 1. Not because I believed it would win. I'd given up on winning. I took it because that's what I do. I follow my system. Win or lose, I show up. Trade 24 won. So did 25 and 26. The streak was over, but the lesson remained. My job isn't to win, it's to execute. Tom now has a post-it note on his monitor. I am paid to place orders, not to be right. It's freed him from the burden of results. He shows up, does his job, goes home. Some days the market pays him, some days it doesn't. But he always pays himself, with consistency, dignity, and peace. The ultimate paradox he discovered. The less he cared about winning, the more he won. The less he suffered from losses, the smaller they became. Not because the market changed, because his relationship to it transformed. His favorite journal entry after a brutal day: lost money, kept dignity. That's a win. Your turn to choose. If you've made it this far, you're different. Most clicked away at traders think like losers. They wanted motivation, not mirror. They wanted tactics, not truth. But you stayed through every uncomfortable insight, every painful reflection, every invitation to see trading, and yourself, differently. So here's the real question. What are you going to do at 9:30 tomorrow morning when the bell rings? Are you going to trade the same way, chase the same high, fear the same losses? Or are you going to remember Tom's 127,000 lesson and try something revolutionary, caring less about winning and more about wisdom? Your mission, should you choose to accept it. Write this on a post-it note and stick it to your monitor. I am not my P&L. I am my process. Then for 1 week, just one, judge yourself only on execution, not results. Green day, did I follow rules? Red day, did I follow rules? Make that your only metric. Then come back here and comment loser below. Not because you are one, but because you're brave enough to learn like one. Because you understand that in this game, the best loser really does win. And you're ready to join that rare club. And hey, if you know someone who just texted you about their sure thing trade, or posted their 17th market is rigged rant, send them this. Don't say anything, just send it. Let Tom's story do the talking. Sometimes the best gift is a mirror disguised as a video. Want more breakdowns of books that actually change how you trade, not just how you think about trading? Hit subscribe, but not for me, for you, for the person you're becoming. The trader who's done chasing and ready to build. Remember, tomorrow the market opens again, and it's going to ask you the same question it always does. Who are you when the pressure comes? Now you have 15 new ways to answer. Trade well, lose better, live free.